wide wing butterfly, okay? This is a really cool strategy. It's going to provide you bigger profit zones. You're going to make it really wide, real wide net, right? And this is going to be great for when we're trading really high volatility markets or high price stocks, because we really can reduce the cost of the trade. It's going to be defined risk, great for hedging, great for targeting trades. We set up our targets. These can be great for target trade for what we call pinning. Great for high volatility markets because we can really keep our risk down. When we're higher implied volatility, we're bringing more premium for the butterfly. We're going to, reduce that cost that way. Trade duration, these can be set up for a one-day day trade, or we could go, 1 to 2 weeks out. You don't want to go too much further out because the way that they design as far as time and volatility component will always gives you a positive theta, no time decay. Returns of 2 to 1 to 10 to 1 or higher. These are just incredible, trade strategy, when you get that direction right and hit your target. So here's an example of a short trade using QQQ and doing this with a wide wing put butterfly, $10 wide spread width or $1,000 wide. So here was the trade setup. It was going to, again, a very fast move down in this trade. So it was trading right here on the 23rd at 314.60, right there. See that support, just like what I just showed you here. And so then it broke that support. And then we had a target for the butterfly down in this area here. See this next area? So right there. So we targeted this area here. So it's a targeted butterfly, but very short in duration because we were looking for this thing to move pretty fast. All right, so here's kind of the profile of the trade when it was set up to see what it looks like. So it was trading here at 314.60. We were looking for that target down there based on, that price action, Fibonacci, some other things we look at. Now, if you'd done the ETF and you hit that target, you're up 10.60 a share or 3.36% return, right? So here's the butterfly though. We were targeting that 304. So we did the 314, 304, 304, 394 wide wing butterfly, $10 between the different strikes, okay? So $1,000 wide spread. The cost of the trade was $2.10 or $210. So the potential profit on this is $790 at the top of the tent, and that would be a 376% return, risking $1 to make 376. Okay, so that's just your profile, so you can see what you want to always know, what is my reward to my risk. Okay, the first thing I always look at. So here it was going out, profit taken here. So now it was on the 26th, so set up on the 23rd. On the 26th now it was trading at 306.17. So it dropped down pretty hard to there. It was trading, it didn't quite get all the way to our target right there, but right there, because this is a wide wing, so we can really have a wider profit zone. So we don't have to get exact. If we did, that's great, but a lot of times you're not. But that's still a great return, making $572 per spread. That's one spread on that risk of $210. So the spread blew out to that 702. You can see right here, 782, $10 wide or $10 cost. So that gives us a return of $572 per spread or a 272% return. So we're taking advantage of that accelerated time decay, volatility collapse, low defined risk, high return type trade setup for the right situation. So that's your butterfly.